Underway shortly. Stand by.
But we're going to wrap
money in the bank.
Rates are good. Pretty exciting.
Hey, welcome back. Thanks for staying with us. This is your Real Estate Chalk Talk. We're in the money segment of the program with the big Kelvin Kaemingk. Okay, so when we went out to break last time, we were talking about how someone could buy a house and get the square footage they want and have it be affordable so that they can get into it, and and then have the money resources available to them to do a little fix up afterwards. And we've been talking about rehab loans, so why don't you just take it from there?
Take it from there on rehab. Well, a couple things on the rehab. One, there's a simple one, right? $35,000 is the max that you can borrow on it. On all of them, you have to get a construction, sworn construction statement.
So walk us through what that process would be like then.
You buy the property.
Okay, and negotiate the best deal you can
best deal
for the property in the condition it's in.
Correct, and you have your contractor come with you at the time and say, and you're talking to them. Let's say it's Matt, then you say, "Hey Matt, what do you think about this or this, or we take that wall out, we do this," and then he'll put together, being a general contractor, put together a bid for you. And a sworn construction statement, and now you're making the offer, get the best deal you can. But then when we go in for financing, we have to submit the purchase agreement and the plans and specs and construction statement.
Okay.
So now let's say we buy it for $250, we have $50,000 of improvements. So now we're saying the value is going to be $300.
Okay.
Now we get an appraisal, and the appraisal you have them do based on improvements, and then they do a final inspection at the end.
Okay.
So pretty straightforward, but we can do it. I'm curious on the one you're doing right now. Did you have to get multiple bids from contractors? Just one.
Just one.
That's the same with us. Yeah. Just one bid,
but from a real guy.
Yep. Yeah. It has to be
and then he had to go. It has to be go and fill out some form paperwork and all that stuff. They need to know that this is not your next door neighbor.
Yep. Legit deal.
Yeah.
Right.
Yeah.
So. And you can use it, even if it's just for carpet, paint, appliances, move a quick wall, or do that. You know what I mean? Like, it doesn't have to be this huge deal. And a lot of times it's just a way to kind of get the improvements you wanted on that property anyway. But now you can finance it versus trying to come up with those dollars after close, because you've just kind of spent everything on down payment, closing costs, everything. So now we're all in.
And
you're
out of cash.
I don't have any money.
Yeah.
Well, you could have added another $35,000. It changes your payment. It doesn't move the needle a whole lot, but now we have the money for all these things.
What about appliances?
Yep. Yeah, appliances.
So you're doing a kitchen, you get all new appliances.
Countertops,
which
appliances.
Is so great, because it's like if you went to the bank and said, "Hey, I want to buy all new appliances. Can you give me a 30-year mortgage on them?" They would, escort you out of the building. So here is an opportunity for you to get those appliances wrapped in to your improvement.
And the reality is, we're telling people right now, as everybody wrings their hands over rates, if you love the home and you always talk about if it has good bones, if the structure's solid, man, get that home now, because you're probably, like you said, 1,000 homes have a decrease in their listing price right now because people are starting to get nervous selling their homes this time of year. You can pick it up, do a renovation loan to improve it, and know that in 6 months to a year, we're going to have a time where interest rates recover, come back down, and now we'll redo the thing. And with our lifetime guarantee, there's no lender fees, there's no appraisal fee, still have an appraisal done, but there's no fee for it. It's kind of like, God, that's not a bad way to play this right now.
And just using your example, if you look at just a very modest, say that we had, a 2% appreciation on that property, and so you've got a $300,000 property that's going to appreciate at 2%. That means that you're gaining $6,000 a year on that property, because your appreciation is based on the whole value of the property, not on your
purchase price.
Not on your down payment amount.
Right.
So if you take that $6,000 and factor it into the actual cash that you've got into the property, that's a pretty nice return.
Yeah.
Just from a pure investment standpoint, and you've also improved it. It's just a smart play.
Mm-hmm.
Just a
No,
smart play.
I know what you're saying, and we're just trying to encourage people to keep looking, because there's a lot of good homes on the market.
Mm-hmm.
We're not running into multiple offers as much now. We're seeing closing costs getting put in, and we're seeing closing costs really more as towards like people saying, "Hey, we just need some money to help keep that rate reasonable right now." Because if we just touch on rates real quick, I mean, we just had a really tough week again, and I was talking with Jared, who's my business partner, like, God, and remember the old TV show 8 is Enough?
Yeah.
Boy, 8 is enough.
8 is enough.
8 is enough, and we're in the 8s now. If your credit, I was running, my computer, of course, dies right as we come into the segment, which was great. But when you're looking, if you got a little banged up credit, like 730, 740, I mean, you're talking.
That isn't even banged up.
No, but you're still talking low 8s, right? Best case scenario, you're getting high 7s right now, and that's just shocking a little bit to people, But again, what are we doing? We're doing a 1-0 buy down for nothing. We could do a 2-1 buy down if you wanted to. So now you start 2% under. So now we're at least starting high 5s, maybe. Still, it's
and that ramps up over how long of a period?
3 years.
3 years.
Yeah. So you got you start 2%, then 1%, then in the third year you're ready. So you'll be okay.
But by the third year you're refinancing.
Yeah. So we're okay on that. But what came out strong. Jobless claims came out better than expected. The jobs report came out this morning. They were anticipating adding 170,000 new jobs, and it came out at 336. So they're only off by half, which you never see.
Right.
But what happens then is the labor market isn't cooling off.
Right.
That's making everybody nervous. So now this morning you see rates are just.
So now we got that November Fed increase locked in.
Absolutely.
Yeah.
Yeah, I think that's now a done deal.
Yeah.
Right? So it's just like, come on. And we talked about it this morning at coffee, like, man, there's just some funny math going on somewhere, because I don't see the new jobs. I asked you if you saw them, like I'm just missing it, but I don't know where all these new jobs are, and I don't know if they're just service industry jobs. It didn't break down, but man, I just,
there's a guy on being interviewed on one of the news shows, and he was a Democrat. Forgive me, I can't remember his name, but he was a Democrat, and he was talking about the housing market and how we can do, because they're talking about affordable housing, and for the first time, I heard out of a mouth of a Democrat, they're talking about, well, we need to get rid of some of these regulations and fees that are charged by. Of course, they blame it always on the local governments,
right?
To get the price down, and that's true. I mean, when you're gonna build a house, the fees in that lot, just in the development, the sack and whack, and the building permits and all that stuff, you got $50,000 or $60,000 into it before you stick a shovel in the ground, just in fees and permits.
Yeah.
So that's partly driving then, and everyone base their build on cost. So now you take that 60,000 with a multiplier effect,
right?
And that's what happens when it hits the retail.
Yep.
Because no one's just passing dollars along.
No. Well, and it's what we talked about. Gosh, it had to be probably a month ago now, where you talked about the increase in sales tax. I haven't heard anybody say a word.
No.
I haven't seen anything. I saw one article come out, because I get Minnesota stuff, and it's like, hey, everything costs you more today.
Right.
No. We turn a blind eye
and just pay it.
And what are you going to do? And especially if you're in Ramsey or Hennepin County, it's a little bit,
it's even higher.
Yep. I'm just like, golly, there's something about just the masses, right? And we just go along and do our thing, and in the meantime, things are eroding away a little bit.
Well, and
not like we're getting off that whole.
I know, but you got the mainstream media that also goes out of its way not to inform people of certain things,
right?
If it doesn't follow their political viewpoints.
So what problem did you solve this week? Talk a little bit about just what did you accomplish? Would it be around the new construction arena?
I think it's that I solved the problem of getting myself
out of a vehicle quickly.
and and into that. But it's just like normal workaday world. I'm working, spending a large portion of my time right now this week just getting through all this probate stuff. We've got some new systems lined up so that we can service our probate clients and their families to try to get them the distributions that they need out of the estates and maximize the yields on those estates. I'm really excited about our rehab business because there are opportunities there as a listing agent. If I list a house that needs work, there's a two-pronged fork that I can use there. I can invest some of our commission dollars into getting that house ready for sale and recover that after the sale. I can also put a loan in place that offers that buyer coming in some advantages that they maybe would not have through another company, and partnering with Loan Depot gives us the ability to do that. So if you have a house that's challenged in any way, there you just don't want to do it, just give us a call, because we'll go in there, we manage the project, we put it all together, and we'll maximize the investment, the yield on your investment there, and make it the best possible outcome
for sure
for that buyer coming in as well.
If you want to have a quick conversation on your situation, give me a call, 651-231-2500. It all starts with a conversation and just kind of see where we go from there.
This is your Real Estate Chalk Talk with the Hittner Group, 612-627-8000. 612-627-8000. Junior's on probation. He's a no call, no show today, so we'll see what kind of an excuse he's got when I talk to him later in the day. We'll be back next week.
You've been listening to your Real Estate Chalk Talk with the Hittner Group, the leaders of